Magandang araw, naimbagnal daw, good day. This is Norma Kudan speaking, and for today I'm going to tackle about compound interest. Please listen because after you watch this presentation, you will have the quiz. Ano nga ba ang compound interest? Ano nga ba ang compound interest? Compound interest is a powerful tool for building wealth, but it is also a devastating tool that can destroy wealth. It just depends on which side of the financial equation you use it. So, depende din sa atin yan. On the positive side, compound interest makes the return on investment. For example, savings, retirement accounts, to grow quicker and more substantially over time. On the negative side, it makes debt. Example, credit cards, grow quicker and more substantially over time. So, meron siyang positive side at meron din siyang negative side. So, sabi nga dito, yung positive side niya is compound interest can make return on investment, while the negative side is it makes debt o utang. Compound interest is the interest imposed on a loan or deposit amount. The compound interest for an amount depends on both principal and interest gained over periods. For loans, compound interest may happen when interest due is not paid and then to loans principal, which then builds upon itself, so repaying the loan takes more time. When compound interest is used in case of deposits in investments, we stand to benefit. On the other hand, when compound interest is charged on loans and debts, the bank and lenders stand to gain. So, ibig sabihin nito, makakapag nabibenefit tayo o yung mga nagdi-deposit o nag-i-invest. Pero kapag naglo-loan naman at umuutang, ang banks and lenders naman ang nagkakaroon ng benefit o sila yung nag-gain. Suppose we observe our bank statements, we generally notice that some interest is credited to our account every year. This interest varies with each year for the same principal amount. We can see that interest increases for successive years. Hence, we can conclude that the interest charged by the bank is not simple interest. This interest is known as compound interest or CI. In short, CI. So, this is the formula. Please take note of the formula para magagamit nyo ito pagkatapos ng presentation is may ipapakwiz kami. So, okay. This is the compound interest formula. A stands for an amount. P stands for a principal. And then R stand for rate of interest. N is number of times interest is compound per year. So, per taon yung N. T is the time in years. So, okay. Types of compound interest. Ano nga ba yung mga types ng compound interest? Ito is yung periodic compounding. Under this method, the interest rate is applied at intervals and generated. This interest is added to the principal. Periods here would mean annually, biannually, monthly, or weekly. Continuous compounding is this method uses natural log-based formula and calculates interest at the smallest possible interval. This interest is added back to the principal. This can be equal to the constant rate of growth for all natural growth. This figure was born out of physics. It uses Euler's number, which is a famous irrational number which is known to more than 1 trillion digits of accuracy. Euler's number is denominated by the letter E. So, So, pag-uusapan naman natin ngayon, meron pa pala akong idadagdag. Compound interest could be applied to both loan and investment. So, ang compound interest is may apply siya sa loan or sa yung loan, yung parang kung halimbawa, yung mga teachers is nag-loan sila para magpatayo ng bahay, ganun. Pero dahil sa kulang yung ipon nila is naglo-loan sila, which is yung loan na yun is mababayaran nila pagdating ng kanilang sahod, ganun. Or pwede namang investment, or yung i-invest mo yung pera mo para mag-increase siya. One of the most crucial needs in the modern world is loans. O diba, naging crucial needs pa ang loans ngayon kasi napapalibutan tayo ng loans. Maraming mga banks or institutions ang mga nag-o-offer ng loans. Banks play a significant role in the loan market, generating a significant portion of their earnings from this. Loans allow people to purchase luxury items such as homes and vehicles, and also help students manage their educational and living expenses. So, para mapag-usapan pa natin, tayo naman ay dumako sa usaping loan. So, ano nga ba ang loan? Excuse me. A loan is a sum of money that one or more individuals or companies borrow from banks or other financial institutions so as to financially manage planned or unplanned events. In doing so, the borrower incurs a debt which he has to pay back with interest within given a period of time. So, ang loan, parang umuutang ka o parang, ano ba yun? In Ilocano is bulod, parang binulod mo yung pera ng isang institution or yung isang bank. So, parang nakautang ka na doon. So, dahil doon, meron silang binibigay na period of time kung kailan ka magbabayad, pero meron ng interest. Kumbaga, nangutang ka or nag-loan ka ng 5,000. Tapos, pagkatapos ng isang month is, babayaran mo na siya ng 5,500. Parang ganun. So, parang nanganganak siya. Hindi nanganganak yung yung pera na literal. A loan is a form of debt incurred by an individual or other entity. The lender, usually a corporation, financial institution, or government, advances a sum of money to the borrower. In return, the borrower agrees to a certain set of terms including any finance charge, interest, repayment date, and other conditions. In some cases, the lender may require collateral to secure the loan and ensure repayment. Loans may also take the form of bonds and certificates of deposit or CDs. So, ano nga ba ang collateral? Yung collateral is ito yung kumbaga sa isang co-op o cooperative, ganon, sa multipurpose cooperative. Kapag nagpapautang sila or nagpapaloan sila, may mga collateral. Ito yung parang ihuhold nila para ma-ensure nila na babayaran mo yung inutang mo. For example, sa amin, dun sa co-op dun sa amin, yung kapatid ko, nangutang yung bayaw niya. So, ang hinold ng multipurpose cooperative para ma-ensure na yung loan is mababayaran within the given period of time o talagang mababayaran talaga o maibabalik yung pera. Hinold ngayon nila yung papel, yung titulo ng titulo ng lupa, yung titulo ng bahay. May mga iba pa nga na kinokolateral nila yung mga alaga nilang baka, ganun. Which is para ma-ensure ng company or yung co-op nga na magbabayad sila, na hindi nila tatakbuhan yung kanilang utang. Usually, yung mga nakikita kong ganun is yung mga ginagawang ganun, is kadalasan is sa mga multipurpose cooperative, ganun. So, what are the types of bank loans in the Philippines? So, consumer loans and commercial loans are the types of bank loans in the Philippines. A consumer loan is a type of loan available to individuals so that they can finance specific types of expenses. The bank acts as a creditor for loans that are either secured or backed by collateral like the borrower existent assets or unsecured without need for collateral. So, dumako naman tayo sa examples of consumer loans. Payroll loans. These are loans that bank offers to employees of companies who have deposit arrangement with the bank. The employee's salary is used as collateral or security for the loan upon which the bank then advances money. So, ang ginagawa nilang collateral dito is yung mga sweldo ng mga employee para hindi nila matakasan yung kanilang loan. Cash loans. If you don't want to give your company's information, you can also apply directly to an institution that offers payday type loans such as LBC or Maybank Yard. However, this type of loan is not recommended because it requires a more extensive application process than other types of personal financing and has higher interest rates than bank loans. So, yung cash loans is mas mataas yung interest nila o yung patong ng loan. Number 3 is the credit card cash advances. This is a loan option under your credit card limit. This limit is set depending on your credit card type and your monthly income. A credit card cash advance is another loan option that you can use if you need to borrow money. This is a loan option under your credit card limit, which means the amount of money you can borrow depends on what type of credit card and how much income you make. The interest rates for this loan option are usually higher than other loans, though, because it is seen as an unsecured loan since there is no collateral involved. So, dito sa credit card cash advances, unlike sa other types ng or examples ng loans, dito is hindi sila gumagamit ng collateral. Kaya mas mataas ang interest rates kumpara sa iba. Personal loans. The most common type of bank loan in the Philippines. Personal loans can be used for just about any need, from investment to medical bills to vacation expenses. Personal loans are available from both banks and credit unions. Banks typically offer higher interest rates than credit unions but require a larger down payment on your home or other collateral. Credit unions tend to provide lower interest rates with smaller down payments required, but they often have less flexible terms regarding repayment schedules and limits on how much money you can borrow at once. Car loans. So, car loans. This type of loan allows the borrower to buy brand new vehicle. So, ang car loans daw is inaalaw niya ang borrower o yung naglo-loan na bumili ng brand new vehicle, a second vehicle, or refinance a vehicle that they already own. Among other bank loans, car loan programs frequently require the most applications as many Filipinos desire to own their cars to combat the traffic problems that commuters encounter in many Philippine cities. O, di ba dito sa Philippines is grabe na ang traffic. So, kadalasan daw ang mga naglo-loan sa car loans is yung mga ayaw nilang natatraffic sila. The amount of money that a borrower must set aside for the amortization of the vehicle is determined by the down payment, the type of vehicle, and the number of months included in the payment term. Housing and renovation loans. So, a housing loan can be used to pay off an existing mortgage, build a new house, renovate an existing one, compensate the borrower for the purchase of a property or a purchase lot. Borrowed funds may also be used for personal purposes. Moreover, it is an excellent option if you want to buy the home of your dreams but cannot afford to pay in full. O, 'di ba? So, housing and renovation loans is maganda ito kasi kung kulang yung pera mo para magpatayo ng bahay na gusto mo, yung mga dream house mo, instead of waiting time or instead of yung mag-ipon ka ng mas matagal, kung meron ka naman ng ipon tapos nakukulang na, pwede kang mag-loan dito sa house and renovation loans para minsanan na yung time na igugugol mo or para mapatayo mo na yung bahay na gusto mo. The Pag-ibig Housing Loan is the first thing that comes to mind when considering housing loans in the Philippines.
Okay, so let's proceed to the commercial loans. So what is commercial loans? Unlike consumer loans, which is intended for a specific purpose, this is a type of loan that is used exclusively for business purposes. Business entities can opt to apply for loans in order to garner capital for their day-to-day operations, to keep company bills paid on time, and to fund the purchase of equipment for facilities, among others. So there are several examples of commercial loans. So one example is revolving line of credits. This is a financial agreement in which a bank issues a maximum credit limited to a business. So long as they do not exceed this limit, the business can use the credit to fund purchases at any time and then borrow that amount again after repayment, much like how an individual would use a credit card. This kind of arrangement proves appealing to businesses for its open ended nature. The credit can be used to buy essential business goods or just to ensure that there is a consistent cash flow. And second example is the accounts receivable financing. So this type of arrangement allows a business to borrow money from the bank against its outstanding invoices or amounts that has yet to be paid from them by their customers. The third example is fixed rate loans. In a fixed rate loans or term loans, a business can expect to pay the same amount of interest until the loan comes to maturity. So both the principal amount of the loan and the rate of interest are set in contract by the borrower and the lender, and the borrower need only to meet the payment schedule. Many businesses opt for fixed rate loans because they make expenditures more predictable. They see it as a big advantage to know exactly how much interest they'll be paying until the loan ends, and they can therefore set the rest of the business budget accordingly. Fourth example is bill purchase line. Through this arrangement, a business can liquidate checks deposited to their name prior to local or regional clearing. So this saves businesses time on waiting for their checks to clear, which means that big amount of money paid to them via check can be used immediately. There are Philippine banks that offers bill purchase lines on flexible terms and free of collaterals. And then the fifth example is equipment loans. As the term implies, equipment loans are loans that can be used to finance business equipments. For a manufacturing company, this may be for equipments to be used at the factory. For a restaurant business, it may be for furniture and kitchenware. This kind of loan will make it easy for a fledgling businesses to foot their equipment purchases, which may deplete their budget if made upfront. The loan arrangement will allow them to spread out payments more evenly and at the same time preserve cash for other business related expenses. And then last is the microfinancing. This is for financial services offered to lower income earners and smaller businesses who would otherwise not have access to conventional banking due to poverty. This service I often cover creation of new bank accounts, microcredit, and micro insurance policies. So the Securities and Exchange Commissions has, has issued the memorandum circular implementing the cap of interest rate and other fees imposing by lending and financing companies and their online lending platforms. So SEC Memorandum Circular Number 3, Series of 2020, which will take effect on March 3, provides the guidelines on the implementation of Bangko Sentral ng Pilipinas Circular Number 1133, Series of 2021 or 2021, of the ceilings of interest rate and other fees charged by lending companies, financing companies, and their online leading platforms. So let's proceed to what is investment. An investment involves capital to use today in order to increase its value over time. An investment requires putting capital to work in the form of time, money, effort, etc., in hopes of a greater payoff in the future than what was originally put in. So, investment refers to putting your money in an asset with the aim of generating income. Financial investments come in different forms such as mutual funds, unit linked investment plans, endowment plans, stocks, bonds, and more. However, the primary goal behind all investments remains the same: to increase the value of your invested money. So, how does investment works? Investing helps you grow more your money, which can be used to meet your future financial goals. When you invest your money, it is likely to provide you with returns. These returns can either be guaranteed or market linked depending on where you invest your money. With guaranteed returns, the amount you receive is fixed at the beginning of the investment. With market linked returns, you get the option to invest in equity and debt markets. Equity markets have the potential to provide high returns but carry high risk as well. Debt markets carry low risk and provide stable returns. The longer you stay invested, the higher the return you are likely to receive. So these returns can serve as a source of income and help you fulfill your financial aspirations. So let's go to the types of investment. So the first is ownership investments. This type of investments works by contributing to a company's capital. Your ownership depends on the number of assets you put in that company. Ownership investments are computed at the end of each year with an increase of with an increase in contribution that earned profit or interest. Ownership investments let you put in money and earn as a company grows or earns profits over time. They are the most profitable, but they are also considered the riskiest. So, examples of ownership investments. The first is stocks. Investing in stocks makes you a part owner of a company, giving you the right to a portion of the company's value and income. Second is business. Entrepreneurship focus on providing a product or service, giving you potential returns from your sale. Then next is real estate. Buying a piece of land or property is also considered an ownership investment. You pay for it and expect it to increase in value over time. You can also earn money by renting it out or reselling it. And then next is precious metal and collectibles. Gold, paintings, and signed limited edition merchandise are all examples of ownership investments. Those who invest in precious metals and rare collectibles expect the values of these items to increase. The second type of investment is called lending investments. So, this is wherein you can lend money to a company and expect returns from interest payments. These investments are considered less volatile and low risk because you can take your money back anytime. So, here are some examples of lending investments: the bonds, certificates of deposits, and saving accounts. Regarding to the first example, which is bonds, when you purchase a bond, you loan money to a corporation or an organization, and then you get paid with a fixed interest rate. And second is the certificate of deposit, which is issued by banks as proof that you agreed to leave a certain amount of money with them. Certificates of deposit are also or almost similar to saving accounts. But unlike saving accounts that allow you to withdraw your money anytime, certificate of deposits requires you to leave your money with the bank for a certain period. And then the last example is saving accounts. This is the most popular form of lending investments and one of the most feasible investments for beginners due to its simplicity and accessibility. You can put your money in a bank account which will earn monthly interest. However, compared to other types of investment, the returns are usually lower. Then let's proceed to the third example of investment, which is cash equivalents. So some investment assets are considered good as cash since they can be liquidated quickly. Short-term investors would benefit from cash equivalents, which are the least risky of all investment types. So here are examples. Treasury bills. T-bills are issued by the government. You can usually invest with a minimum of 50,000 pesos. And then next is commercial papers. These are issued by SEC registered Philippine corporations to fund short-term obligations like inventory purchases and payrolls. So that's it for the presentation, and thank you for watching and listening also.
So here is a sample problem. Luke deposits 1,000 into his account that pays an annual interest of 9%. what will be the value of the account after 10 years and 20 years. So let's try to solve the problem using the compound interest formula. So first, we will identify the givens, which are principal amount, which is equivalent to 1,000, the interest rate, which is 9%, and the n, or the number of times the interest is compounded per year, which is 1, and the number of years, or the time span, which is 10 years. Now that we have the data, let us now try to substitute it with a formula. So 1,000 here is the principal amount, 0.09 is the interest rate, 1 is the n, and 10 is the number of years. So let's solve the problem. First, we would solve whatever is inside the parentheses. So in here, 0.09 divided by 1 is equals to 0.09, and 1 times 10 equals to 10. And then let us try to get the value of 1 plus 0.09 raised to 10. Then multiply it to the principal amount, which is 1,000, which give us the answer of 2,367.36. So the value of the account after 10 years would be 2,367.36. So now, we will solve the value of the account after 20 years. So just like a while ago, we would use the compound interest formula, and we would use the same data, but the only thing that changed is the time span, which is now 20 years. So let us substitute it to the formula. So 1,000 here is the principal amount, 0.09 is the interest rate, 1 is the n, and 20 is the time span. So we will do the same procedure that we have done a while ago until we get the value of A, which is 5,604.41. So the value of the account after 20 years would be 5,604.41.
So here's another example, doon naman tayo sa loaning system. So the problem is Mark borrowed 50,000 pesos from the bank with 10% interest rate which compounded quarterly. How much will Mark have to pay after 2 years? So first thing to do is to understand or analyze the problem. So ang hinahanap natin sa problem is the future value. So ang gagamitin natin formula is ito. So the next naman is to jot down the given. So it will be easier to solve the problem. Next is to substitute. Ayan. Nandyan naman na, nakasulat na, and magsosolve na. So, solution. So, first thing to solve is yung nasa parentheses muna. So, ayan, nakikita naman natin kung paano yung pag-solve. Nakikita naman natin kung ano yung process. So, ang sagot is 61,000 pesos. So, Mark will have to pay 61,000 pesos after 2 years. Kung ang hinahanap naman natin is hindi future value, kundi ang interest value, madali lang yan. Ang gagawin lang is, kukunin lang ang difference ng future value, which is the 61,000 pesos, and the present value, which is the 50,000 pesos. So, 61,000 pesos and 61,000 pesos minus 50,000 pesos is 11,000 pesos. And that's the interest value. 'Cause all of the small